Welcome back to Optima Partners' next installment of our podcast series, Momentum Advantage. In this episode, we will be delving a little bit into the role of machine learning and AI in the credit industry, with a bit of a focus on credit risk and affordability assessments. Today, I'm delighted to be joined by Dr. Iain Brown. He's the head of data science for SAS Europe and also an adjunct professor at Southampton University. With almost 20 years experience in data science across major sectors, Iain has over the years driven adoption of machine learning and AI across leading UK organizations, and his focus is on business adoption of advanced AI methods, and he's providing a currently thought leadership and strategic steer to businesses. Iain's also an experienced public speaker and author and regularly presents at international conferences. I'm also joined by Andrew Donalds. He's the Director of Engineering at Optima Partners. Andrew has over 20 years of experience in delivering innovative solutions across the FS and energy sectors, covering most of UK's household brands. His expertise lies in solution and architectural design and oversight of enterprise scale data, cloud, and software engineering. And I guess since joining Optima, just over 3 years ago, Andrew's managed to stand up a one-man band into a team of nearly 30 engineers and a multi-million-pound turnover. Andrew and Iain, it's a great pleasure to have you both here.
Likewise, Dan. Thank you for inviting us on.
The topic we were going to explore today is the role of machine learning and AI in credit risk and affordability assessment. But I guess the focus that I think would be helpful to explore here is two dimensions, and we'll see how far we can go, is the barriers to operational adoption of advanced machine learning in that area. And by those, we can cover areas which are both cultural barriers and technology barriers, and just to get your thoughts on how businesses can go about unpicking those. And kind of the second side of that coin is really the ethics around using these more advanced techniques, which are, let's say, less transparent and explainable than more traditional methods. Iain, you first. So most organizations in principle support the deployment of advanced machine learning and credit decisioning, but if we look across the spectrum, very few organizations actually adopt them in anger.
Yeah.
So what are the key operational barriers that you observe when you talk to clients, organizations that at the top level they say, yeah, we're all in it, but ...
Yeah, I mean, you're right to call that out early on, I think, Dan. It's funny, I thank you for your introduction and referencing the time that I've been in this space. I was actually quite lucky early on in my career to be involved at the University of Southampton in a credit risk kind of collaborative between Edinburgh University and Imperial College. And that includes the likes of Lynn Thomas, Jonathan Crook, David Hand, if those names ring a bell for those that are listening. But they were leaders a lot in this space around the application of more advanced techniques for credit risk modeling. And even back then, we were proposing the uses of gradient boosting. I think I was quite lucky to be involved in one of the first research projects that suggested using ensemble trees to predict probability of default. So you're right, this has been around for some time now, but we're still seeing organizations struggle with part of the adoption. I think part of that, I mean, there is a lot of hype around artificial intelligence. We can't get away from that. And that sometimes overshadows the practical fundamentals and the implementations of what this could be used for. And in reality, financial institutions really need to focus on the key core operations that they run within their banks, right? Explainability of models, governance around the approach, and also, and this is one of the biggest hurdles, I think, is integration with legacy systems before these AI projects really get going. So I think there's a number of points maybe we can discuss on that. I do think a pragmatic approach, and where this has worked well. So also I've worked with a number of organizations that have actually moved quite far forward with that and are deploying machine learning and now looking at even agentic AI. We might have a chance to touch on that in this discussion. But it needs to be incrementally integrated. I think you have to start with some really key focused use cases, almost a low-hanging fruit, without boiling the ocean, to use a few analogies there, before you then look to replace systems outright. I think if you have that within mind, there's a few stepping stones to do that. And we've worked with a couple of large banks recently, actually, on their AI governance strategy and initiatives around the EU AI Act, which is, again, although we're not directly adhering to in the UK, we're seeing a lot of organizations looking at those regulations because they are quite clear and precise around how these models are going to work. So you're right, there's still barriers there. We're seeing some steps in the right direction, but I think there's more to be done to see the real value of some of these approaches bringing to bear.
It's interesting what you said about legacy systems and organizations are increasingly moving into cloud.
Yeah.
So Andrew, from your perspective, I guess you've stood across enterprise scale migrations from on-prem into cloud, be it Azure and GCP, supported by various ancillary platforms. In your view, what are the key success ingredients of a successful migration and deployment of these technologies?
You mentioned at the beginning of the session, Dan, about the growth of our department and things, and I think probably one of the reasons for that, I mean, I think we would all want to be occupying a really great AI-enabled world and getting a great experience out of AI, but I think governance and data quality and things, those are the things that are holding back AI from its full potential, I think. And so, yeah, I mean, when you're moving from an on-prem orientated a large platform and you're going out to the cloud, I mean, firstly, can I get the data where it needs to be in the timely enough affair? Can I guarantee the security of that data getting there? But specifically for the AI related elements, I mean, what did the quality of the data look like in the first place, right? Was it well governed? Was it well controlled? So we're doing a lot of work at the moment with big businesses around the UK in order to improve their governance stance. But quality assessment, I think, is something that businesses could be doing an awful lot more of. I think that you tend to find in big platforms that have accumulated data over time that front end data capture, like from call center agents and things like that type of data can work its way into your pipeline, and you can have like transcription errors in how that data has been acquired, and that leads to poor quality data, often broken. And then that's a big holdback to your AI potential, because you don't want a conclusion to be drawn from a piece of data that's obviously broken or malformed. So yeah, that's a big consideration. Yeah.
And in terms of, so you've as we've gone over the years and you've seen different technology stacks being deployed, what's your view on the nature and the composition of in-house data teams, engineering teams that have had to morph and change in order to adapt to these new technologies?
I guess the age of the company itself quite often dictates the technology position and the people that derive it, right? So we saw this with challenger banks and things, and they seem to be able to make faster progress sometimes than some of the more traditional kind of bricks and mortar banks that have been around for a couple of hundred years. But and I think they're taking a starting point where they're operating in the cloud, whereas lots of tech teams in big organizations in financial services have had a tech team that's maybe been on the board for 20, 30 years. So they've had to adapt and change over time, whereas jumping straight into the market with the capability, something to be said, with the whole, young ambitious team maybe that's much closer to the technology because they've just left university recently, joined a new startup type of organization. That probably creates a little bit more technological engagement to motivate things. But still, the old challenges are still there, right? As I said, data quality, data governance, it's not always the most fun of things to get into, but it really ensures that you're operating from a stable standpoint and you can serve your customers better than your competition if you're taking these things into account, right?
So Iain, maybe turning to you a little bit on just having a view of these technology providers that say we are, yes, of course we can deploy X, Y, and Z. Yeah, can you distill a little bit that distinction between fact and fiction, as in what's being touted to be possible and then what you see on the ground and how you navigate around that?
Yeah, definitely. And obviously I have to preface this that I work for a technology company. So hopefully my opinion's not too biased, Dan, on that. But as I mentioned before, I think that many providers do oversell the plug and play nature of AI, right? And the ability for this to be used for anything almost, the silver bullet, as we might call it. And as we talked about already, there are barriers here to that. But actually, it's often not hindered necessarily by the technology as well, but by maybe organizational resistance or knowledge gaps, particularly within risk. I think we've probably both seen that over the years. And there is a part of that that's needed around AI literacy, a bit about training. I think people need a clear understanding of what AI can and can't do. And I think that impacts also your understanding of what is true and what is not true. The fact and fiction, I think, as you just put it there, Dan. I think you've got to prove the value of this. And most cases where we have seen success, as I mentioned, this has been incremental. And we've proved something that works, and we can determine the value from that. I always look to a great case we work with a building society around using machine learning for behavioral scoring. And actually, it was less about the type of model that was being used, but more about, can this be deployed from the start? And will this make an impact on our decisions? Will this change the outcomes for our customers as part of that process? And that was the view that was taken from the start. It wasn't, can we put the greatest and latest new tech in? It's, can we validate this? Can we justify this? And can we present this and get internal sign-off before we even do it? Because if we can't get to that point, if we can't bring stakeholders along on that journey, then what's the point? Unfortunately, we do see a lot of these, what we'd call white elephants, where something's built internally, but there is no application for it. It's been built potentially without business engagement, so that the business don't see the benefit, and it might sit in a silo somewhere. And I think that's the biggest struggle around the fact and the fiction, is that there needs to be the right stakeholder buy-in for this, and you need to prove the value as early as possible to show that it actually uplifts from what you're doing today.
So that's an interesting one, proving value, because I guess there's ways of proving value in a conceptual offline manner. Yes. So through the shadow insights and analysis on with a lot of the time and this is, I guess, especially true for credit and affordability assessment, there are external things that impact a final decision. So whether that's the risk appetite or policy rules or regulation and everything that's quite rightly sits around that can very often diminish the size of the prize. Especially in that contained manner, to the point that's the leadership might say, actually, this is not, the effort is not worth it.
Yes.
How would you navigate? So in those good cases that have seen successful outputs, what would just the success criteria or ingredients that's actually meant that even potentially that was encountered, but wouldn't necessarily have?
And you're right. I mean, these things, it needs to be a strong enough case, right? And for those of the audience that are familiar with performance metrics like Gini, right, still foundational to how a lot of models are evaluated. The higher the Gini, the better, right? The better ability to make the right risk decision. Now, in parts of the exercises we've been through, it's to look at, okay, the existing process, what is the accuracy of that process? If we introduce something that's machine learning or AI driven, what is the delta? How much improvement in their accuracy can you get to? Right. And as you say, Dan, there will be other factors that would also lead into that decision. But is that a strong enough case to then look to deploy this? So as part of the evaluation process, it's really looking at the ability or the kind of upper extent to what you can apply. Because what you also find is some of the most advanced techniques, if you are looking at more the generative AI, or even neural networks, there's a trade-off there around the ability for them to be accurate, but also for you to understand them. And in a lot of cases, that without that explainability, with that black box approach, even if you could get that uplift, it's not going to be acceptable, both internally and externally, when you have to validate the responses you make. So I think as a joined up piece, you need to look at the ability for a model to improve a current process, but also what's the acceptability of that within the end-to-end that it needs to be applied in. And that's typically where you start to uncover some cases where it's possible, and also some other cases where it would never be appropriate to apply that.
So we've talked a bit about behavioral credit risk assessment
Yes.
of existing customer base. Are there use cases? So if we are talking to an audience of decision makers who want to go down a certain direction, are there specific avenues that you would say this is where you should be exploring or evaluating?
Yeah, so where we've seen its success is more on the internal behavioral model approach than the application process, right? Also, there's a lot more data when it's a known customer to you. So we have seen significant uplift in model accuracy and then realized value with applying machine learning methods to behavior models in the extent to 20 to 30% uplift in accuracy, which is huge when that's been applied and actually been realized and deployed. But also we're seeing other avenues to explore now as well. And I don't know, we may come on to this around synthetic data generation. This is a really interesting topic at the moment, if those listening have heard about it or looked into it. But it's the ability to enrich and enhance existing data sets synthetically. So creating new behavioral data. It mimics the patterns of the existing data, but it doesn't replicate the data. It creates lookalike information. Now, that's great for privacy preservation. So particularly if you can't get access to data easily internally, that is an application of it. But we've also seen usage where it adds to the quality of the data. So it's useful if you have gaps in the data. So if there's bias and not a full view of the population, but also if you have imbalances. And that's something we see a lot within risk, where you have maybe a class of customers that are always good payers, that they don't default, they don't go into arrears. And then you will have a class that unfortunately do fall into arrears and do go bad in terms of their loan. But it's a very small percentage in most cases. So there's a huge imbalance within that. So we've applied it where we've synthetically created more bad customers, fed those into the existing build process, and found through holdout and validation of the existing data that models can be improved. Even standard traditional linear type approaches can be improved if you enrich data. And I think, Andrew, you mentioned this point early on around data quality. There's a huge amount of value in just improving the foundational data than applying a really fancy front end solution that will potentially come unstuck. So there's a couple of areas there. I would certainly say there's huge potential. I know the the FSA are looking into this, and there's a synthetic data expert group that was created a couple of years ago, and they've released a white paper last year on this topic. There's market moves, particularly in the UK, around looking at the potential of synthetic data to enrich and enhance risk processes.
Yeah, I mean it is an interesting one, and we at Optima also invest quite a lot of time into options for how we can enrich not necessarily just training data, but operational data as well with generative AI methods. It can be a slippery path. This is still a new and nascent territory, and I guess one of the things that's should always be considered in this is the data generating mechanism and the generalizability and the bias-free nature of solutions that are both trained but then also applied using synthetic data.
But again, I would say, just make a point on that, Dan. I agree. I mean, I wouldn't suggest reliance completely on synthetic. I think you need to have a good quality set of data to begin with. And this is talking about enrichment and enhancement. And I certainly think there's avenues there. As I said, the fact that the FCA have also made some noises around this shows that there's potential around the governance and the regulatory side, that there's benefits. I think other areas around fraud detection as well, where we have similar challenges, is an application. And also, and I don't know, the credit reference agencies probably will hate me for this, but also reducing the reliance on calling out to a third-party data vendor when you can just enhance the data you have. I mean, the biggest banks we have in the UK, there's always an argument how much more information will actually improve your process when you've got so much at your disposal already. I think there's another avenue in there that is yet to be fully explored.
And sorry, Andrew, I want to get your view on on the data governance side.
It struck me. It's interesting. It's like I think Ian's right. Augmenting for missing this really in your data set is like, and using synthetic data to that end is quite a good idea. I mean, maybe we should play a little bit of a thought experiment here, because I guess this is synthetic data is probably not. I know it's getting a lot of popularity now, and I know you can use Gen AI to make your synthetic data a lot more real looking than perhaps we've ever seen before, right? And but I can remember years gone back when we were doing data generation, building out data sets to go into databases and things in order to do testing and to flush through the testing. And in those cases, it's just simple things like the length of the data, or a number is within a threshold, or a postcode looks like a postcode. Those kind of things. Those are all great. But once you start, I had a challenge with a data science team in a company I worked with previously, where they said, can you put together a big data set for us that looks like that, do a whole load of data gen on it so that we can play around with that data set. And of course, me and the guys in the engineering team that I was working in, we set up on that challenge, passed the data over to the DS team, and they said, well, it's terrible. And we were like, well, why is it terrible? Because, it looks all right. There's names, forenames, surnames, that kind of thing. But we can't find any relationships in the data, right? We can't derive, who has a good, I don't know, let's say credit rating, who has a bad one. And that's just because it was entirely generated. I think when you get into the more advanced elements of simulated data, I suppose what you're trying to do is embed complex relationships within the data that actually resides there. And the more you can do that, the better it is for testing. But there's nothing as complicated as actual real people, right? That old adage, the difference between reality and fiction is that fiction needs to make sense, right? It's like whereas reality seldom does, right? So it's the kind of marrying of those two things.
If I can jump in on that, Andrew, I do think that it's evolved a lot, even in the last 5 to 10 years.
Yeah, for
Generative
sure.
adversarial networks, GANs, are those proposals around synthetic data generation. So they are very good if trained correctly. And this also, there's another question around the compute requirements for this, and using graphical processing units as opposed to CPU. But they do have the potential to mimic the relationships across all vectors at a high degree of accuracy. And we've seen cases of 94, 95% similarity with a generative set of data to the original. So I think we are moving in that direction. It's becoming more feasible to trial this and check this in the process. Cool.
There is an aspect there to add in, as much as, and this is actually quite pertinent for financial services products, is that the existing data generating mechanisms, the ability for customers to produce that data is driven by our existing processes, decision making, and the ability to generate that data in the first place. So missingness of data is itself data. And to give a very simple example, is older people not using digital banking, but actually going into a branch to take cash, and they consume their services in a paper mode. So, but that's something that's embedded in any data. So no GAN will actually pick up what an older generation would actually do with their digital banking had they adopted it in the first place.
Yeah.
Where I'm going to with that is a confounding of exogenous factors, the unobservable factors, and then inference of behaviors if somebody were allowed or given an opportunity to generate that. So I think there's a lot to go still further. I think there is a risk of organizations falling into a kind of excited sense of security. We can enrich our data, but ultimately, even with the existing methods in large language models, essentially these are just big regurgitators of past things. What they can't capture or they can't anticipate is what that behavior would look like.
I think we can all agree the importance for those that are listening into this and are considering generative AI is it needs to be grounded in truth, and you need to be able to validate and improve the outputs and the decisions that you're going to make, and that doesn't change, right? We shouldn't reduce the kind of requirements because we're applying a new fancy technique. I think we can all agree that needs to be validated and controlled, and I think it's identifying those maybe cases where you can trial this first, that maybe less high risk, less material decisions are potentially ways to start to trial these approaches.
I guess if we think about our credit industry, it's years behind that. As you said, we're still to see many banks adopting XGBoost as a scoring mechanism, let alone Gen AI. So I guess one of the things that there's always a fear of unknown. So what if things go wrong in real time? So Andrew, from your experience, the things that you deal with, what are the key checks and balances that you would say, here's almost like a cheat sheet of things that you should be doing to ensure that doesn't happen?
I would say that, real-time parameter validation is probably a good idea, and collaborative parameter validation, so the output parameters of any decision that's made. So the data looks to be in the correct form, it looks to be within expectation, within a reasonable threshold of certain values. I think those are all easy things that you can do. I think that there's, those are automated mechanisms and controls that you could have in place that would look at your outputs. But also, I mean, we've experienced the use of AI kind of embedded in big business operations and things, where it perhaps sits alongside something like a call center agent. So AI is making a conclusion on a certain interaction with a customer, but then the actual agent is there seeing what conclusion is being drawn and marrying up whether that inference itself matches with the expectations of having spoken to that individual. So I suppose there's adding the human back into the process to make sure that it's running reasonably. I think that's a very prudent check as well.
And in terms of the skill set of people operating these pipelines in a live operational setting, enterprise scale systems, have you seen over the years an evolution of the skills of that engineering tech stack? Are we talking more about cloud engineers, data engineers? What's the makeup of individuals who are needing, or the teams that are needing to operate these systems?
Yeah, I think it is changing. I think we talk about cloud engineering as a thing. I mean, it you don't have to go back that far for it not really to have existed at all, right? 10, 12 years maybe. So yeah, I mean, I think we're talking more about serverlessly agnostic processes that exist. So, if we were to go back 10, 15 years, you'd be talking about, an on-premise server in a server rack in a warehouse somewhere, or
sitting
even
in
your building. Yeah,
Yeah.
There's that horrible thing where the cleaner comes in and unplugs the cable to use the vacuum cleaner, and the whole organization goes offline. Yeah, luckily we're not in those days anymore. But I think, in those days you probably would have been orientated in a data platform that resided on a server. You would probably be running a lot of ETL processes. You'd probably be running lots and lots of batch mode operations, right? So, and perhaps overnightly batch runs to refine processes and things. I think now we live in a world where computer's cheap and it's easily accessible, and a lot of things are event-based workloads moreover than batch-based workloads, and that means your engineers probably move away from being that hardcore kind of data engineer to having to be versed in other things like microservices, and to understand payloads in real time, and the rate at which the volume of data that a microservice can deal with in real time, and bursting, as we use that phrase to say, what's the burst traffic of this service, and understanding that in advance and building the spec to that kind of plan. So yeah, I mean, there's also adages as well as, if you think about the world where the server's in the cupboard, that's quite an easy financial model, maybe not a good financial model, but an easy financial model to understand. Your organization maybe pays 30,000-40,000 to secure this server, to make sure it has the right software footprint on it and that it's integrated into your operation. In today's age, total cost of ownership is significantly less. You're paying for the services that you're using as you're using them. So engineers have to be mindful of that, right? Because, if you scale up for a demand of traffic, let's say, that goes really, really high, you could be paying an awful lot of money in an individual day. So you don't have to, the old school way is, I've paid that 40 grand, I don't need to worry about it anymore, I can't pay any more. If the server gets to the point where it's loaded with traffic, it's just going to stop. Whereas in today's age, things are almost infinitely scalable, right? But so are the costs.
So that's interesting. So Iain, when you talked about evidencing the benefits or quantifying the benefits, what's the interaction between evidencing value from a data science perspective, i.e. increasing model discrimination, or Gini will reduce bad debt by a certain number of pounds. Actually, theoretically, that's one side of things. But how much does that then interplay with the cost of operations of getting something like that operationalized?
It has to go hand in hand. I think we have seen a move to cloud over the last decade, particularly driven by an attempt to reduce costs. I wouldn't say that's always been the case, though. I think a lot of CTOs have found that the overall costs have potentially even gone up because consumption's also gone up as well in terms of that data availability and the access. I think they do need to go hand in hand, but there are efficiencies that need to be considered around the cloud compute and how much, the data is still being reproduced potentially in some of the use cases. So typically in projects I've been involved in, that's part of the consideration. It's not just about can we do it faster, better, more accurately, but can we do it from a cost perspective, cost reduction perspective, and also the sustainability piece comes into this. I think we again probably don't have time to go into that today, but there are huge concerns around the amount of compute that these AI processes need and the increase in carbon footprint of some of these organizations. I think that needs to also be looked at, and hence why it goes back to my point that you need to be really articulate with the value cases and driving the best benefit, and not just create cottage industries within an organization, even within the risk department, of playing around with things for the sake of it without having a clear strategy around where AI can benefit. I think that needs to be part of the conversation as well.
So would you say that we've talked about synthetic data or wider data? Is there an element then of we're marrying complex data with complex methods? Is that a risk too far for businesses to consider then? Or do you see that there is value in pursuing that?
Obviously, Dan, I'm an AI pragmatist and an optimist. So I think there is value here. Otherwise, I wouldn't be doing the job I do. I think the importance is to consider what are the applications that are going to be applied first. And it needs to a certain extent, be reviewed and centralized and agreed upon. I mean, we actually see a lot of job roles around CDAO, Chief Data Analytics Officer, even Chief AI Officer, CAIO, appearing now to kind of control some of this. So there needs to be controls in place. I think there's huge potential. And as I said, we are seeing deployments of this today, and we are seeing value. Otherwise, organizations wouldn't be adopting or trying to adopt AI. And it's not just around the automation piece, but it's the value add. And typically, my suggestion is look at the innovative cases. What could you do differently to what you do today? Is there something new and novel? Is there a new approach that could be taken that will enhance existing processes, but not always completely replace them? And that also goes back to the point we've both discussed around synthetic data. It isn't around replacement, it's enrichment. And I think that's an augmentation of existing processes is usually an easier case to play. And also don't forget that, I mean, there's a concept of human in the loop, human out of the loop, human on the loop. There's three kind of personas there. That particularly for high material decisions in risk, where we're talking about here, there always needs to be a human element to that. And that's not a complete replacement of the processes there are today, but it's an enhancement and an enrichment of things that are done today.
Just putting on a customer's hat on my head, what's in it for me? I mean, AI tends to get a bad rap in the press, especially some specific sectors of the press. Yes. How do we get the consumer on our side?
Well, also I think we've got to be careful with how we define these things. I mean, AI is a huge umbrella term these days for so many different things, and a lot of the general public will assume it's large language models. They won't know that, but they'll think about a chat interface like ChatGPT, and that is AI, right? And that's the only experience they have of it. But we know, and most in the industry know, that AI incorporates lots of different strands, whether it's natural language processing or computer vision or traditional supervised and unsupervised machine learning approaches. This goes across the board. And I think we have to show that there's value in some and parts of these, and there are applications that, one, do add value, but also don't abstract from the interpretability that's needed as well. I think there needs to be more transparency with all of this, and organizations need to be clear and upfront with what data is being used and for what purpose. But at the end of the day, there needs to be some benefit to the customers as well, whether that's a faster decision on your loan or your mortgage application, or whether you get money back as part of a process as well. I think there needs to be a tacit agreement almost around how data and AI is being applied and how that benefits consumers as much as it benefits the organizations that are wanting to get value out of it as well.
I guess that becomes even more challenging if we have to explain to individuals that we've used synthetically generated data to train our risk assessment models.
I think it comes down to, there's a general AI literacy, data literacy that organizations need to support their consumers with as well. I'm not saying that they should go into the granular detail of how these models are parameterized or how they're set up, but in essence, what the data is being used for and how the decision may change because of that data. I think that's a fair expectation that we should all have of organizations to provide to us, right? Likewise, we'd expect if I apply for a loan, the bank would tell me why I was not accepted if that was the case. So there needs to be a clear delimitation around what it's being used for, how is my data being used in that process, and some of this is going to be legislation, regulations as well. I mean, we already see part of that in the UK around standard foundational PRA regulations, but also the EU AI Act is being very precise around automated decisions and what kind of feedback needs to be provided to consumers.
Yeah,
so I think that will evolve as well.
I saw a relatively interesting use case recently with an old colleague of mine who is working on an AI solution, not for credit risk, but for the recruitment business, and doing outbound calls to people who have just submitted a CV or look like they're interested in recruiting for a particular role, and built out an AI bot to perform that behavior. And I think there's a lot of wins in that scenario because, and I think honesty, I think, is one of the points, Ian, you kind of mentioning there, which is when that bot does its outbound calling, it doesn't pretend that it's a human. It actually calls itself out as being a bot and an AI-enabled conversation. But it's trying to just do pre-screening to get details like, I don't know, your name, your address, your right to work in the UK, so that it can be forwarded onto the recruitment agency. And the reason to do that is because that enables this pre-screening round that would take, I don't know, 5-10 people who would ordinarily work in a recruitment agency to go through that process to get a finite number of candidates in. Whereas when you use the AI, you can contact 10, 20, 100 times more people. And so they're getting in their details submitted at a faster rate. So there's value for the customer there, but there's also value for the agency itself. And it's very transparent. I mean, if you don't want to deal with the bot, you don't have to. You can stop that call. So I think that's kind of like I think that's the kind of trick to all of that, is mobilizing all of it so that it helps everybody and everyone can see the value, right?
Precisely right with that, Andrew. I think that's bringing that across to the consumer as well. I think we see it in fraud all the time. We work closely with Nets, who are a leading digital payment provider in Nordics. So we see less of them here, but I work closely across the Nordics accounts. And they use AI for real-time fraud detection. But at the end of the day, they're flagging these high-risk transactions. They're providing feedback as part of that process, and they're reducing the false positives by, I think it's around 5-6%, which means that at the end of the day, the consumer will benefit from it. There's less chances of fraud happening, but also their payments being flagged if it is non-fraudulent. Now, if AI can help with that, we all benefit from that, right? You don't really want to be abroad and have your card declined unless there's really good reason for it. And if that can be done in real time, we talked about real time as well, at the point of sale, and a more accurate decision with AI behind the scenes, I think we'd all benefit from that as a society as much as the bank does as well.
I mean, it's an interesting notion and concept that there does appear to be more scrutiny on the ethics and the fairness of decision, transparency of decision making with the onset of AI.
Yeah.
If we think back in the days of HI, human intelligence making decisions, the bank manager saying, well, I think you're good for a loan or not. What's the transparency threshold in those areas? So that's I guess there's as somebody once said, the only black box in the room is the human brain, right? So everything else is ultimately
I personally think AI should be held at a higher standard to us as humans, and I think we should be rightfully expecting that. But also, coming to the understanding that you can't, AI is not always going to be able to give you every answer definitively. It's going to have a confidence to it, but being clear that it's got that limitation, that's not going to be accurate 100% of the time. But as you say, Dan, I mean, do we expect ourselves every moment of every day to make the right decision that's backed up by evidence and data? Unfortunately not. And I would actually prefer an AI to be making decisions about some critical things in my life than my own HI, as you call it, human intelligence. So I think there's that balancing act there, but also back to Andrew's point, and I think we both talked about trust and openness about how these decisions are coming about. That's got to be the crucial expectation that both organizations and the general public have around these models.
Yeah, so maybe just to close out on that one with another kind of a adjacent theme, which is, how would I frame that? System resilience and the ability to reproduce an output or a decision. And I think that's one of the areas of concern, I guess, with more of the open source software which is out on the market, that's relying on external packages and libraries and software being regularly updated, but then also being able to roll back to previous versions. So Andrew, from your perspective, how do you navigate around that notion of being held hostage to things outside your control?
So there are some quick wins in it all, I think. So, and it's a delicate balance of an area that I suspect you didn't expect me to go in, Dan. But like I think that quick wins and things that you can do, like in Python environments and things, particularly if your capabilities wrapped up in a Docker container, maybe, or serverlessly, pinning your versions. So I would always try to pin my versions so that if there's a future dated version of a component, it isn't automatically upgraded, and then the whole execution goes ahead with something that's kind of unproven, if you like. So, but then that represents its own risk as well, because when you've got let's say a microservice that's deployed and it's got that library, that open source library within it, over time, those libraries, there are security vulnerabilities found in them or weaknesses. And so organizations use tools like Sneak in order to be able to look at those microservices and determine whether they've got vulnerabilities within them. So then you have to jump into an upgrade cycle, and then you have to be exposed to a newer version, which might have a behavior that you haven't planned for. But then, I guess you still shouldn't unpin for that notion. You should still keep your version number pinned, but you should then have a subsequent rebuild to production and a subsequent testing run and make sure that everything's okay. But if you've designed a well orchestrated production pipeline, you've got your DevOps pipeline to facilitate all these things, change a build number, repeat all your testing, run all your unit test cases, all of that kind of thing, prove that it works, and then push it formally to your production process. So yeah, that's a very formulaic engineer's answer to your question.
No, but I guess so. So what I'm hearing there, Andrew, is that all the key facets and themes of best practice engineering still hold. So yes, we are talking about a new paradigm, but actually everything that you would do in a principled software and software engineering, data engineering in the old world, those same principles still hold, maybe in a slightly different form.
Before we had AI, those processes were there to protect humans from doing irrational things. Yeah. So now we just maybe need to push the AI into those kind of places as well, right? So yeah, I think it's a good point.
And I'd agree with that. I mean, obviously, I work for a proprietary software organization, so you might not expect me to say that open source does offer a huge amount of flexibility, but I think you need more hybrid approaches as well when it comes to regulated reproducibility and explainable type setups, so that you can actually bring alongside the open source with proprietary to create those audit trails, make sure that there is reliability and auditability in it. But also, I think, Andrew, you may kind of related to this point around containerization of deployments as well. Maintain the consistency across cloud environments and minimize version drift. Packages do get updated quite often, and there are risks associated to that. Deprecation of those packages, or even I think there's been wasn't there a GitHub malicious code hack that was only last week in one of the repos that was affecting quite a lot of repos actually, in that case. So you need to be able to go back in and then retrofit if there are issues that arise from that as well.
Okay, so yeah, I think we've covered quite a few topics here. We did touch on generative AI, which I'm pleased, but more potentially a teaser for our next session on that. So I guess just to close out, maybe Iain, I'll start with you. Top 3 things that you would say that organizations and leaders who are looking to adopt advanced AI and offering credit to more and more of their customers.
Yeah, I
what
think,
would they be?
I mean, AI adoption, particularly in credit decisioning, which we're talking specifically around here, as I said at the top of the session, it's more than just the technology aspect of it. It's about trust, it's about governance, it's about transparency. And I think AI must be aligned to those to really start to show the value, both to win over internal stakeholders and, as we've discussed, externally, those that are going to be foundationally affected by the decisions it makes. And I think the future of AI in this space, it is not just about the automation, but it's the augmentation that we talked about as well, to enhance and enrich existing decision processes. And I'd like to think that that's where we'll get to over the next few years as AI becomes more adopted within risk decisioning and within credit risk applications as well.
Andrew?
Yeah, I think that we're moving into a rich and interesting new world with everything that's coming along in the AI space, and it's only going to get better and better. I think my hope for organizations is that they invest the effort to get a really good quality curated data set that's the beginning point for that whole process. Well curated, well governed, well quality assessed. I've learned of a few organizations recently that are actually starting to employ quality teams in their business after various methods have been identified in order to identify data quality that's missing or poor. And then to go out and augment that by recontact of the customers and things in order to say we need to get things into a better position for you. I love that as an operational principle, because then you're continuing to reinforce your data standards and make them the best that they can possibly be. And that's all on the ingestion into your AI process. On the output of your AI process, I think guardrails, controls, mechanisms, just to be comfortable with the output, never to be ungoverned in responses back to a customer or into a process.
Vigilance and control is the mantra
yes,
there.
Yeah, completely. Yeah.
Well, hopefully we've covered we've peppered across different aspects of machine learning and AI and credit decisioning. Let's say I hope the session was useful for the audience. Yeah, thank you both very much, and I'm sure there'll be options to delve into some of these topics further.